Welcome back to another episode of Cameron's Corner. My name is Cameron Hecking, and today, again, we have TJ Shelley with First Colony Mortgage with us. In today's episode, we're going to talk market update. We're hitting the end of 2025, so we're going to talk a little bit of a market update, and then we want to talk a little bit about the buying process, specifically when involving lending and how to get you as a new buyer set up for success in today's market to be able to go out, find the home that you're looking for with confidence, know exactly what you can buy, and set up a solid strategy for you in Utah County's home buying market. So to kick it off, TJ, if you want to just go over kind of the current market, any updates that you have on where things are at, I'll let you just kind of spit with what you're seeing.
For sure. And glad to be here. Thank you so much for inviting me to be on. So some cool things are happening in the market. I think one thing people have always said, rates are going to come down. If you look at interest rates from December 2024 to rates now December 2025, we're down about 0.75%.
Cool.
So, I mean, it's still not the magical COVID numbers that I don't think we'll ever see again, but you can see rates have come down about 0.75%. So that's helping home affordability a ton. And it's hopefully going to keep on trending downwards, maybe not 0.75% again by December 25 or 26, but it should be trending down and be at least stable.
Yeah, I mean, and with where we're at right now, even 0.75% does a ton as far as like affordability goes.
Yeah.
And I've talked a lot about how home prices are obviously a fact. Like home prices and interest rates going up is a factor for where we're at with affordability. The thing is, home prices though we're not seeing those dipping drastically, and so anything that we can get on this interest rate side, any sort of dips that we can see there is a huge positive for buyers. How much and obviously I know this is all variable, but how much does a 0.75% do quite a bit as far as qualifying power goes?
Yeah, I think the important thing to think about is whenever you're doing with mortgage real estate, the numbers are all really big, right? Mm-hmm. So if you're borrowing $500,000, just for easy numbers, right? If you're borrowing $500,000, 1% of $500,000 is $5,000, mm-hmm. right? So if you divide that out over 12 months, it's going to be a little bit over $400 a month each month that you're saving.
Okay. Yeah.
So you can always just kind of do the quick math, say what's the big number, what's 1% of that, and
go from there.
Cool.
So as far as the overall, so it sounds like, obviously we don't have a crystal ball, but things moving into 2026 are looking better than they were when we were going from 2024 to 2025. We're moving in a positive trend, and we're noticing that a lot with, I feel, at least in my personal experience with buyer sentiment, is like the curiosity. There's a lot more people who are kind of opening that door to purchasing, and they're, going through with either talking with a realtor or doing a pre-qualification with a lender. Like there are more people who are entertaining that. Have you noticed that recently? Like, have you noticed mortgage applications going up, going down, or what have you personally been seeing as the trend as far as applications have gone?
I feel like applications have gone up. For me, they've gone up from December 24 to 25.
Yeah.
I noticed a difference. But as a lender, like when rates go down, your phone rings. People are interested. Mm-hmm. So I think one of the best things you can do, like unless you're a very unique individual, like you're not tracking the market, you're not tracking what interest rates are doing every day. So I'd say like the best thing to do is get in touch with someone like Cameron or myself. We're monitoring those things. So when you reach a position where, home affordability, a $500,000 home is going to work for you at a 5.75% interest rate. As soon as it gets there, we're aware and we'll reach out to you. So if nothing else, just so you don't have to stay on top of it, talk to somebody who's going to keep you informed and reach out to you when the timing's right.
For sure. And you as the buyers, I think you do need to realize there's been such a pent up demand. Like I feel like we've both seen, like we've had so many conversations with people who they've wanted to buy for a year or more and they haven't pulled the trigger. And so just like you said, a lot of people aren't staying on like the very specifics. However, you do have a lot of people right now who are on the cusp of wanting to buy, and it has become less of just a want and more of like a need. And so I feel like there are buyers out there who have their fingers like on a trigger ready to go. And I think that you as a buyer, it's really important to make sure that you are prepared to do so when the time comes. So whether you're waiting for the interest rate to hit the right number or whatever you're waiting for personally, I think it's very important that you know what you need to do before you go submit offers, before you reach out to me and say, hey, I found this house that hit the market that seems to have a lot of attraction and I want to go look at it. Because if it's a house that's catching your attention, it's probably going to be catching other people's attention for whatever reason, whether it's price, whether it's whatever. And so if you're not in a spot at that very moment to do something, you do have lots of buyers who have been waiting and pent up for so long. And so to help you be best prepared, I wanted TJ to kind of go over a little bit pre-qualification. So there's two words that I hear people use pretty interchangeably, and it's pre-qualification and pre-approval. However, you and I know that those are not the same thing.
Yeah.
And so talk to me about the differences in those and what is going to set a buyer up for success the best if they are preparing to buy going into 2026.
Yeah. So like you said, they get used interchangeably all the time, which makes it confusing as a buyer. It sounds like almost the same thing. So
Yeah.
Pre-qualification, pre-approval. A pre-qualification, me as a lender, I'm never going to tell a seller or anybody that you're good based off of a pre-qualification. The reason being is a pre-qualification would you be calling me and saying, hey, TJ, I make $120,000 a year. My credit's about 780. I don't have any debt. What do you think I would qualify for real quick? And I would do essentially just quick math and say, okay, based on what you told me, you're probably safe around this price point.
Mm-hmm.
So I can tell you, hey, if you're not lying to me, if everything is accurate, this is what it's going to be.
Yeah.
And that's a pre-qualification. So,
and pre-qualifications are still, on my side of things, pre-qualifications are still super important because I'll have somebody reach out to me on Instagram or have a friend call me. Somebody raises their hand saying, hey, I'm interested in buying. And the first thing that I do, because there's a lot of inventory out there right now, the first thing that I try to do, I have that basic conversation with them, and then I immediately try to get them in contact with you. I immediately either get a group chat going or them on the phone with you, because even though a pre-qual isn't what we're going to, and we'll talk a little bit more about like the steps going forward, but even though a pre-qual isn't what we're going to like submit offers on, it gives me kind of like, it lets me start narrowing down the search and putting together a game plan behind the scenes on like how I want to go about things with the buyer. But then so that gives me kind of like the blueprint. It gives me the skeleton. And then as I'm getting my ball rolling, I'm looking things up for them. Then they go through and they do like the full pre-approval with you, right?
So
what does that look like?
So that's what I like. Just going back to what you said, a pre-qualification, if you call me, I'll pick up and you'll probably have a pre-qualification or a number to work on in less than 5 minutes.
Yeah.
So it's going to be super quick. It's a great place to start. And honestly, I prefer just saying, hey, this is roughly how much it is before you go into the full pre-approval.
Mm-hmm.
So the full pre-approval process, just like how you told me, hey, I do X, Y, and Z, you're going to fill out an actual loan application. So you're going to fill out your address, where you work, you're going to give me all of your financial information. And then I'm going to go through and verify everything. So there's 3 things that lenders really care about. It's capacity. So do you have the ability to make payments? Credit. Do you have credit? Hopefully you have a credit score.
some sort of credit. I've had that where they haven't, and that's a whole other piece in itself.
And we can start it up.
Yeah.
And then after that is like, do they have the capital? Do they have down payment, or are they aware of down payment assistance?
Yeah.
So I look through, okay, let's do a credit check. And for a pre-approval, not all lenders can do this, but I can do a pre-approval based on a soft pull. And what that means is there's 2 types of credit pulls. There's a soft pull and a hard pull. If you get a hard pull, it's going to notify, the credit bureaus are going to notify all of the banks that you're shopping for credit. So it's going to make your score go down, and you're going to
get lit up.
You're going to get spam calls from every bank and mortgage company under the sun.
Yeah.
So we don't want that to happen to you. We're just going to do a soft pull so it doesn't alert anybody you're shopping for credit. It just gives me access to your information.
And I don't think you guys realize how huge that is. Like, I've had a lot of people who we've started the initial conversation. There's a lot of people that I talk to that like I did not know them prior to this. And so there's not like the trust there. Like, and so if I go to somebody and I say, hey, my lender's going to go pull your credit, and they are just reaching out, like these are people just starting the conversation. And if you're just starting to look, that could feel intimidating. And that's why a soft pull is awesome. We can get everything that we need. We can get you ready. We can get you pre-qualified to submit all of that with you having the assurity that like your credit hasn't been touched. And the reason that's huge is I feel like that really eliminates any excuse that somebody has.
It's not scary. Like, it's not scary to get pre-approved. I'll do the soft pull. And I think the most important thing to me, like just having somebody's credit report, if your credit score is 660, but you can get your credit score up to 740, I want to tell you how to do that. And I can analyze your credit, and we can start game planning so that your interest rate doesn't suck as bad as it would be if you were 80 points lower on your credit score.
Yeah. So really, the purchasing process, I believe if you're looking to purchase a home, the purchasing process starts with buyer consult with me, talking to me about what you're looking for, and then simultaneously, just as important, is starting that lending conversation and knowing that it's really not as threatening as a lot of people make it out to be. Like, especially the way that you do it, especially the way the First Colony is set up. Like I said, there's really no risk in seeing where you're at. If you want to purchase, we might go to, get you approved, and you might have expectations here, but then come in, maybe up here or maybe down here. And we want you, regardless of where you're at, we want you to be able to just realistically know where you're at. So if your goal is to buy in 2026, there might be some things that people aren't even aware of that they need to get fixed, or they might be in a completely different spot than they think they're at. And that's why this pre-qualification, this beginning step, that's why I think it's vital. And I think that agents are doing disservices to their clients if they're taking them out and showing them tons and tons of homes, getting this expectation set without having this lending conversation, just because for some agents, it could be intimidating. It could be kind of the scary conversation to have, talking about money. But the cool thing for me is I know that with TJ, I know that my people are going to be able to have a very low, it's a very low intensity conversation. It's really just figuring out where are you, where do you want to be, and how can we as a team help you get there, essentially.
Yeah, that's what I was going to say. It's just game planning. Like, what I love is game planning and working with clients to say, hey, if your credit is this, it needs to be this. If your maximum payment that you want to be making your mortgage on is $2,500, how can we maximize purchase price based on that? And it's more just working with you to hopefully get what you want while staying within the budget of what you want to pay for.
Yeah. And you don't really understand, you can see a bunch of people posting on Instagram, this house is going to cost you this amount per month. That number is extremely general. Like you don't know until you know what your specific situation is. Like, I look at every loan and every situation, every person I work with, it's like a fingerprint. There's nothing that is exactly the same. Yeah. And so that's why starting this conversation, starting this as soon as possible is huge. So if you are looking to purchase in 2026, or if it's a thought that has even crossed your mind, reach out to me. I'd love to get you connected with TJ. Like I said, this is a very non-threatening part of the process, and it really does bring a lot of clarity to those who are looking to purchase. So TJ, do you have any final tips, any final things to consider for people who are looking and considering purchasing going into 2026?
Yeah, I just want to promise you guys, it's not scary. It's super easy. Like I said, I can give you a ballpark number extremely fast on a pre-qualification, and even a pre-approval, it's not that hard. You'll fill out your information online. It'll take you 10 to 15 minutes for me to get everything I need. And I can be as intensive or as low intensity as you want, depending on what you want to do. But at least take 15 minutes to do that so that you can have a plan moving forward.
Yeah.
Like, if Cameron calls me and says, hey, so-and-so wants to put an offer on a home right now, I can do it.
Yeah.
But it's going to be so much better. You're going to save so much money I promise you will save so much money if you start on it a month before, so we can have your credit in check, we can have your down payment figured out, and it's going to be a lot more low stress for you.
Yeah, that's what we're here for. We're here to be a resource for you. Purchasing in any environment is a stressful thing. It's an emotional thing. And our goal is to take that and use our expertise that we have to navigate you through the process. So if you or anybody you know is looking to buy in 2026, reach out to me. I'd love to get you connected. Thank you so much for joining us on another episode here at Cameron's Corner. Thank you, TJ, for hopping on. For sure. And we will see you guys next week with some more real estate information here in Utah County.